Hellenic Bank actually recently acquired some of the good parts of Cyprus Cooperative Bank to create the country's second largest lender. What was the rationale behind that?
To begin with, economies of scale. In this industry, banking industry, big is beautiful, with all the regulation and regulatory obligations that banks have nowadays. There is a minimum critical mass with regards to the cost base that banks have to acquire nowadays. And the acquisition of the second largest bank, the good part of the second largest bank, the cooperative, effectively safeguards the bank, makes it bigger, and therefore able to support its customer base and generate the revenues. It's a viable institution now.
So when will the merger be completed? Is it going to plan?
The merger, the acquisition has been completed on the 3rd of September, 2 weeks ago. And now we're going through the integration phase, whereby we're trying to ensure that customers get the seamless service via all the branches of the bank.
Are there any more M&A opportunities in Cyprus?
There will be plenty, I believe. Cyprus is a very overbanked and overinsured market. To give you some metrics, the assets per bank employee in Cyprus is 8 million. If you compare it with the rest of the European Union, it's 16 million. So that shows that we are doubly overbanked. The population per bank employee in Cyprus is 80, whereas in the European Union is 160. There is 11 credit institutions on the island. It is definitely the right size, I would say, probably 3.
So are you targeting anything? Do you want to buy anything?
Not for us, no, not for us, not for
Hellenic
so just
Bank.
At this point in time, our focus is to ensure that we manage to proceed with the integration of the cooperative. We expect this to take a year to be fully completed and make sure that we are at steady state. At which point, of course, then we can start considering other options. But at this point, the focus is definitely integration.
How will Hellenic Bank actually benefit from the upgrade of Cyprus?
Well, Cyprus is, the upgrade of Cyprus is creating a lot of tailwinds with regards to international investors coming on the island. There is significant foreign direct investment, both on the banking sector. For example, Hellenic Bank now has a diversified shareholder of international investors, same for a number of the other banks. Also, investors are looking to acquire non-performing loans, so they're coming on the island to buy the non-performing loans of the banks, which will help leverage the sector. But also a lot of foreign direct investment in areas like health, education, tourism, of course, and shipping. The banks have ample liquidity. Certainly, Hellenic Bank is one of the most liquid banks in Europe, and that provides the ability to give lending, expand, therefore, the balance sheet of the bank, and ensure that you have stable and healthy banking sector on the island.
Mr. Matsis, when you look at, of course, the Russian sanctions, they've had an impact on wealthy individuals banking in Cyprus. Have you had a similar effect with the turmoil in Turkey?
The turmoil effect in Turkey has not affected Cyprus in a significant way other than tourism. The Russian sanctions have affected only the international part of the banking business, where the banks are trying to ensure that they are, of course, compliant with international regulation and best practice with regards to AML issues, know your client, etc.
So we have actually a viewer IB question. So we thank all of your questions. Keep on logging onto the Bloomberg, and of course keep on asking our guests questions. So this person is asking what the Cypriot banks are doing about the entrance of new players in the market, mobile banks payment providers, such as Revolut and similar players.
Yes, clearly the market is opening up, especially now with the PSD2 directive. The banks, especially Hellenic Bank, we are very much focused on ensuring that we upgrade our technology and we provide the customer. The technology is a channel. To begin with, you need to ensure that you have a good range of products, and banks tend to have a much bigger range of products to fulfill the client's requirements than providers such as the ones that you have mentioned, Revolut, for example. So you have to ensure the products are there, and then the channel to deliver the product, which is becoming more and more the virtual channel. So traditional banking has relied on physical channels, such as the branches, and now it's a question of upgrading technology to ensure that clients get a seamless service via smartphone apps, internet, etc.